Hello CA final students, this is your Mr. GST CA Vishnuvardhan. This video is mainly to cover all the amendments applicable for your CA final November 2024 exams quickly in no time. So this is a quick revision video on those amendments. If you want a detailed video or the material, the links are given in the description, so please refer them. And without wasting further time, let us cover the amendments quickly which are helpful for you on the day of your exam or before that for your quick revision. Let us go into the video. So the first amendment is nothing but regarding, in Schedule 3, actionable claims are covered, so they are not at all supplied. But lottery, betting, gambling are treated as supply of goods and hence taxable. For these three things, three more extra things have been added. That is online money gaming, casinos and horse racing. These are also actionable claims but called as specified actionable claims, and if you make them, they are called as supply and hence taxable. And one more amendment with respect to this is time of supply. Normally for goods, if the advances are received, not immediately taxable. But for these six things, if you are making the payment, that payment itself, the date of receipt of payment itself will be treated as time of supply. Next one is, if you are purchasing food and beverages in theaters, what is the tax treatment? If you are buying the food and beverages along with the ticket, then the food and beverages are also taxed as per the ticket. And if you are purchasing the food and beverages separately in the theaters, obviously they are treated as restaurant services and taxed accordingly. The next one is the holding company holding the securities, the shares in the subsidiary company, whether it is to be treated as supply or not. There were various things regarding that, but you just remember, any company just holding shares of another company will not be treated as supply, and hence there won't be any GST. Normally whenever the goods are imported into India, the IGST shall be levied along with the customs duty. And also the government has a power to levy IGST only without levying customs duty. So using those powers, what the government has did is, online money gaming has been included in specified actionable claims and they are taxable. Any online money gaming is being imported into India, it will be treated as goods, but it will be subjected to IGST without levy of customs duty. And director services are covered under reverse charge mechanism, but the services provided by the director in the capacity of director only covered under reverse charge mechanism. If any services is providing in his personal capacity to the company, then it is not subjected to reverse charge mechanism. Transportation of passengers through e-commerce operator like Ola, Uber, GoAbigo, all that stuff. So e-commerce operator are liable to pay GST. The amendment there is, if at all they are using motorcycle, motorbike, fine. But if they are using an omnibus for transporting the passengers, then if at all the transporter is a company, the company is liable to pay GST. In other cases, the e-commerce operator is liable to pay GST. For example, I am booking a ticket from Chennai to Hyderabad using GoAbigo, and the transporter is a company, the transporter himself is liable to pay GST, and if the transporter is anybody else, then the GoAbigo will be liable to pay GST. That government services are exempt other than postal department services. There is such point. Now the amendment is, after the postal department services, they have also added Ministry of Indian Railways. So that is the only amendment which is covered in exemptions as well as RCM. So next to the postal department services, they have just added the word Indian Railways. The next amendment is regarding when you are importing the service of transporting the goods by a vessel from a place outside India to India, and this is provided by a person located outside India. Earlier it was taxable and hence it was subjected to RCM, but now they have given an exemption to this service, so there is no RCM, no FCM. So I repeat, if you are transporting the goods by a vessel from a place outside India to India and the supplier is a person located outside taxable territory, then it is exempt under GST now, and hence there is no RCM, no FCM. And newly in your syllabus, they have added goods subjected to RCM. So we have been studying already the services which are subjected to RCM. Now we are going to see the goods which are subjected to RCM. So simple. If you are a registered person, you are buying certain goods from an agriculturist. 4 goods. Number 1, cashew nuts. Number 2, BD wrapper leaves. Number 3, tobacco leaves. And number 4, raw cotton. If you are buying these things from an agriculturist and you are a registered person, you are subjected to pay GST under RCM. This is number 1. Next, the another goods which is subjected to RCM is essential oils which are made from anything other than citrus fruit. Like for example, if you are buying the essential oils like made through peppermint or spearmint oils or watermint oils or horsemint oils, etc. And you are a registered person buying these things from an unregistered person. I repeat, you are a registered person buying these oils from an unregistered person, then it is subjected to RCM again. The next one is silk yarn. If you are purchasing, you are a registered person, if you are purchasing silk yarn from a manufacturer who is manufacturing their silk yarn by rearing the silkworms and extracting the silk yarn from them. So from such manufacturer, if you are purchasing the silk yarn and you are a registered person, then again RCM is applicable. The next one, State government, union territory and local authority supplying the lottery to lottery distributor or a selling agent. In such cases also the lottery transactions are subjected to RCM. So the lottery distributor or selling agent is subjected to pay GST under RCM. The next good which is notified is if you are a registered person buying from central government, state government, local authority or union territory other than Indian Railways, if you are buying from them, number one, used vehicles, seized and confiscated goods or old and used goods and waste and scrap. If you buy these things from the central government, state government, union territory, local authority other than Indian Railways, then again you are the registered person, you are liable to pay GST under RCM. Right. The last one in this is private sector lending certificates. Any registered person making sale to another registered person subjected to RCM. So these are the goods which are covered under RCM and which are added in your syllabus.
Generally, the advertising companies will take the hoardings on rent and will be advertising the products of their clients. In this case, if the hoarding owners are renting the hoardings to the advertisement companies, then the place of supply shall be determined as per 12 subsection 3. But if the hoarding owners are not giving the control of the hoarding to the advertisement company, and the hoarding owners are also just providing advertising services to the advertising company, that means the hoarding is completely under the control of the hoarding owner, then the place of supply shall be determined as per section 12 subsection 2, the general rule. The next one is regarding place of supply. Any registered person making supply of goods to an unregistered person, then the place of supply shall be whatever the address is recorded in the invoice, that shall be treated as place of supply. If the address is not recorded in the invoice, then the location of the supply itself will be treated as place of supply. And here one interesting thing is recording the address of the recipient doesn't mean the detailed address, just recording the state name is sufficient. So
the next one is section 13 subsection 9 has been omitted from this place of supply provisions. So because of that subsection is omitted, if you are transporting the goods including the mail or courier things and where the supplier or the recipient any one fellow is outside India, then for that purpose you should now refer section 13 subsection 2, that is the general rule, not 13 subsection 9 anymore because it has been omitted. And coming to the next amendment with respect to exemptions, earlier the satellite launch services if are provided by ISRO, Antrix Corporation Limited or New Space India Limited, they were exempt under GST. But now this supplier, that is ISRO, New Space India Limited, all that thing has been removed. That means these satellite launch services provided by any person is going to be exempt now under GST. There is a new exemption entry in GST, that is services provided to governmental authority. That is, if you are providing services to governmental authority by way of supplying water, public health, sanitation conservancy or solid waste management or even slum improvement and upgradation, these services provided to governmental authority are now exempt under GST. Next, with respect to exemptions, there are two clarifications. One clarification is there are district mineral foundation trusts which are set up by state government for the interest and benefit of the persons affected by mining, and these are nothing but governmental authorities. Whatever the GST benefits, the exemptions available for the governmental authorities are equally applicable to this body also, that is district mineral foundation trust. The next clarification is regarding, see, normally you know that supply of services, that is pure services or composite supply where not more than 25% value of goods are involved, is provided to central government, state government, local authorities, is exempt under GST. The clarification is regarding, there is a body called Central Public Works Department which is under the central government. For them, if you are providing any pure services or composite supply of services with respect to horticulture, because this particular department undertakes the responsibility of managing the parks, developing and maintaining them in the government residential colonies or government offices or even other public areas. For this particular department, if you are providing these services, pure services or composite supply of services not exceeding 25% value of goods with respect to horticulture and horticulture works, that is also exempt under GST. And the next amendment is regarding the value of supply. The interesting thing, very very important for you, you know, online money gaming and casinos has been added in specified actionable claims and hence they are subjected to GST. Now for the valuation purpose of online money gaming and casinos, they have brought in rule 31B and rule 31C in valuation rules. Rule 31B 31C says that if you're going for playing online money gaming, what is the value of supply? The amount whatever you have deposited for playing the game, that shall be treated as value of supply. And if by any chance if the amount has been returned to you or refunded to you because you are not playing the game further, all that stuff, those things will not be excluded. I repeat, any amount returned or refunded to you will not be excluded from the value of supply. Once it is deposited, it will be taxed. And with respect to casinos also the same thing, sir. Whatever you are playing in casinos, the games, whatever it is, for that, whatever the tokens or chips or coins, coupons, whatever you call them, what is the amount you are paying to purchase those coins, tickets, coupons, etc., that amount shall be taken as value of supply and it will be taxed. And here also again, whatever the amount is returned to you or refunded to you shall not be excluded from the value of supply. So once the amount is deposited, it will be subjected to GST. But one interesting thing here is, by any chance, if you are winning from this online money gaming or in casinos, without withdrawing that amount, if you are continuing the game and playing the game using that particular amount, it shall not be treated as amount deposited again. That means if you are winning something without withdrawing, if you are continuing the game, there will not be any GST. And for these specified actionable claims, that is lottery, betting, gambling, casinos, online money gaming, horse racing, all these things, the time of supply, even though these are goods, for goods the time of supply is actual date of invoice or due date of invoice, whichever is earlier. But even though these specified actionable claims are goods, for these things the time of supply shall be the date of receipt of payment, not the invoice. Next one is, there is a clarification regarding personal guarantee given by the directors to the company and as well as corporate guarantee given by any related person to the company. First one, coming to the personal guarantee given by the director for the loans borrowed by the company, whether this is treated as supply and whether it will attract GST or not. You understand the director is a related person to the company as per the related person meaning, and whatever the transaction is happening between them, even though it is done without consideration, it is supply as per schedule 1. But for that, the valuation rule says that the value should be open market value. So the open market value shall be taken here. But the interesting thing is, RBI guidelines clearly says that a director giving personal guarantee to the company should not take directly or indirectly any consideration from the company. So technically there is no open market value. The open market value is 0, and hence here there is no GST liability. But however, there are certain exceptional cases where the directors who are no more connected with the management of the company are taking consideration for giving this personal guarantee. In that cases, yes, that amount whatever they are getting as consideration shall be treated as supply and hence it will be subjected to GST. The next one regarding is the corporate guarantee given by one company to another company because they are related, or a holding company to the subsidiary company. So these people are giving guarantee, corporate guarantee for the borrowings taken by the another company, and they are related person. Because of that, they have inserted a new sub rule under rule 28. So 28 sub rule 2 says that the value for such services will be 1% of the total guarantee offered or the actual consideration whatever they are receiving, whichever is higher. And this rule should be followed irrespective of the fact that whether the recipient is eligible for ITC or not. Please be very clear with this. The next clarification is regarding the services provided by head offices to the branch office. See, now the point is, sir, head office and branch office are nothing but the distinct persons, and the valuation shall be done as per rule 28. And the rule 28 says that you take the open market value as value, and if the recipient is eligible for ITC, whatever is disclosed in the invoice, that shall be taken as open market value, and that will be taken as value. So when the head office is charging to branch offices, certain cases they are not raising the tax invoice itself to the branch office, or when they are raising the invoice to the branch office also, they are not including the cost of the employees or certain other things which are included in providing this service. This cost has been not included in the tax invoice given to the branch office. Whether this is correct or not is what the doubt. And the government has clarified, because branch office is eligible for availing ITC fully, if you have given the tax invoice, whatever has been mentioned by you in the tax invoice, that itself will be treated as open market value, and happily you proceed. Suppose if the head office has not at all issued the tax invoice to the branch office, then it shall be deemed to be the open market value is nil, and there should not be any GST implication. So head office need not worry about this, because branch office is however eligible for full ITC. The next clarification is regarding where the renting of immovable property is done along with the supply of electricity. Mostly you'll be seeing this in malls, airports, etc., where they're renting the premises and they're collecting the rent as well as the maintenance charges, whatever it is, including the supply of electricity. Here the supply of electricity is treated as auxiliary service, and it is a composite supply where the principal supply is renting of immovable property. So the electricity charges included in that will be subjected to the same GST rate what is applicable on the renting of immovable property, no matter whether that electricity charges are separately billed or billed together. And the interesting thing is, here if the same activity is provided by any resident welfare association or real estate developers, etc., these people are charging the electricity charges from their tenants as a pure agent, And here they are not going to collect anything extra than what has been given in the electricity bill by the state electricity department or the discoms. So here these real estate developers or resident welfare associations are treated as pure agents, and whatever the electricity charges they are collecting from their tenants will not be added in the value of supply, and it will not be subjected to GST. The next clarification is regarding the head office receiving common input services and taking ITC, but that common input service may be attributable some cases both head office and branch office, or exclusively to branch office. In such case, head office can straight away take ITC of that and pass on that credit to the branch offices, whatever is related to them, by issuing a tax invoice to the branch office, and branch office can happily avail ITC. Or if they want to go with a different way, that is head office can register as an input service distributor and can follow the ISD provisions. But registering as an ISD and passing on the credit is not mandatory for the head office. Just issue a tax invoice and branch office will take ITC of it. The next one is regarding registration, and we have already seen any person supplying online money gaming from a place outside India to people of India, then they should definitely register under GST as per section 24, that is the next amendment. The simplified registration scheme, which was earlier available for supplier of OIDR services from a place outside India to non-taxable online recipients in India, the same simplified registration scheme has been made applicable for obviously the online money gaming suppliers from outside India to person of India. So that is what we have already seen. Yes, that simplified registration mechanism is applicable for these people also. So while applying for registration, they need not disclose their PAN and they need not select the state or union territory in which they are going to apply for registration. You know, through the amendment in Schedule 3, the online money gaming has become taxable, and the amendment is related to when a supplier of online money gaming is located outside India and is providing the online money gaming services to the persons in India, then the supplier itself is liable to pay GST. For that purpose, he should register under GST through a simplified registration scheme introduced by the government. And if he is not having a physical presence, his person, anybody representing that online gaming supplier, should be registered under GST and should be liable to pay GST. If he is not having the physical presence, or if he is not having any representative as well, then he should appoint a person in India just for the purpose of paying tax. This is just like similar to e-commerce operator under section 9 subsection 5. And one interesting thing is, if they are not following this procedure and if they are not paying the taxes, their online money gaming access for the general public shall be blocked by the government.
The next amendment is with respect to when any person obtains the GST registration certificate, he has to give his bank account details in the GST portal. Earlier within 45 days, but that has been amended now to 30 days. So within 30 days from the date of obtaining the registration certificate, or from the date of filing GSTR1 or IFF. So whichever is earlier, they have to file their bank account details in GST portal. Otherwise, the department has the right to cancel the registration of the applicant. The next amendment is with respect to registration. If any applicant or registered person's business premises has to be physically verified by the department, now the physical presence of that applicant or the registered person is no more required. So without the physical presence of that registered person or applicant, the department can carry out the physical verification of the premises. Earlier, any person who is selling the goods through e-commerce operator has to compulsory take GST registration, but now the department has relaxed that they can enjoy the threshold limits given in section 22 subsection 1, provided any person who wants to sell the goods through e-commerce operator is going to GST common portal using his PAN card, getting an enrollment ID and submitting it to the e-commerce operator, and making sure that he is not making any interstate supplies, can supply the goods through e-commerce operator without GST registration and enjoying the threshold limit in section 22 subsection 1.
You know that normally, see, recently the government has allowed the unregistered persons also to supply their goods through e-commerce operator. So they have to follow certain conditions like applying for enrollment number, all that stuff. Adding to this concept, they have brought in some other rules here saying that they making e-commerce operator also to follow certain conditions. They are nothing but simple. Again, e-commerce operator should not allow the unregistered person to supply through such e-commerce operator without enrollment number. And number 2, they should not allow them to make interstate supplies. And number 3, e-commerce operators should not collect TCS from them because obviously they are unregistered persons. And finally, the e-commerce operator should file a return called GSTR 8 by giving all the details of the supplies made by such unregistered persons through this e-commerce operator. And another interesting thing is, if multiple e-commerce operators are involved in this transaction, the e-commerce operator who is finally liable to release payment to such supplier has to follow these conditions, not all the other e-commerce operators. In continuation with the previous amendment, now composition taxpayers are allowed to supply goods, not services, goods through e-commerce operator, and e-commerce operator has to make sure these composition taxpayers are not making interstate supplies through them, and e-commerce operator should collect TCS. In previous case, unregistered person's case, no need to collect TCS, but here composition taxpayer is registered, so e-commerce operator should collect TCS. And the last one is GSTR 8. The e-commerce operator shall file GSTR 8 by giving the details of composition taxpayer supplies which are made through such e-commerce operator. You know, biometric based Aadhaar authentication was available or applicable only for Gujarat as a pilot project, and now that has been extended even to Puducherry and Andhra Pradesh.
Any person whose registration has been cancelled can apply for revocation of that cancellation of registration within 90 days. Earlier it was 30 days, but now he can apply for revocation within 30 days from the date of cancellation of order. Or if that 90 days has expired, he can go and approach the additional commissioner or joint commissioner and can ask for the condonation of delay, and the additional commissioner or joint commissioner can condone the delay up to 180 days. So that means law has given 90 days time limit, and the additional commissioner and joint commissioner has extra 180 days time limit to grant you revocation of your cancellation of registration. The next amendment is with respect to e-invoice. You know the e-invoice threshold limit is now currently 5 crores, not 10 crores, not 20 crores, nothing. It is just 5 crores now. And one more interesting thing is, if e-invoice provisions are applicable to any person and he is making a supply to any government department or entity which is registered under GST for the purpose of complying section 51 provisions, for such government department or entities, if we are making the supply and if I am supposed to follow e-invoice provisions, of course even I have to raise e-invoice for them also. There is no relaxation whatsoever.
The next amendment is, generally when any supply is made to an unregistered person, his name, address and other details should be mentioned in the tax invoice only if the value exceeds 50,000 or if it is equal to 50,000. But if it is less than 50,000, the name and address of the recipient is not required. But if the supply is made by online money gaming person, or supply is made by or through e-commerce operator, or if the supplier is an OIDR service provider, in such cases, irrespective of the value, that is no matter what is the value of supply, if the recipient is unregistered also, the address of the recipient should be mentioned in the tax invoice, and here address in the sense just the name of the state mentioned on the invoice is more than sufficient. Next one is regarding again interest calculation with respect to wrongly availed ITC and utilized it. See, when you are calculating e-credit ledger balance, compensation cess balance you should not at all consider for calculating this ITC ledger balance falling below the limits, because compensation cess can be used only for compensation cess payable. So you should not consider that for calculating the IGST, CGST, SGST balances falling below. The next one is small one. The TCS collected by the e-commerce operator, he will be filing his GSTR 8 and that will be reflected in the portal of the registered supplier who has made supply through e-commerce operator. Obviously, unregistered persons TCS provisions are not applicable. So for the registered suppliers, that will be available in their portal. The next amendment is regarding when the supply of goods or services are made through e-commerce operator and there are multiple e-commerce operators involved in the transaction. In such case, who should follow these TCS provisions? Understand, as we have already discussed, the e-commerce operator who is making the payment to the supplier has to follow the TCS provisions. And the next another doubt in the same clarification addressed was, when the supplier making the supply through an e-commerce operator, the supplier is also an e-commerce operator and he is supplying something through another e-commerce operator to some other buyer. In such case, whether TCS provisions are applicable? Yes, because even though the supplier is an e-commerce operator, he is also making a supply through another e-commerce operator. TCS provisions are applicable. Simple, you are supplying through e-commerce operator no matter who you are. When the e-commerce operator is making payment to the supplier, e-commerce operator is supposed to follow TCS provisions under section 52.
GST return filing shall be blocked for two new reasons. That is, number one, if your outward supply details are given in GSTR 1 more than in GSTR 3B, and the another reason is if you are claiming ITC in GSTR 3B more than what is available in 2B. In these cases, you will be served with a notice and you should respond to the notice. Otherwise, your return filing shall be blocked.
The next clarification is regarding export of services. You know, when you make the services like export of services, there are conditions like supplier should be in India and recipient located outside India, the place of supply falling outside India, and the consideration should be received in convertible foreign exchange, or in certain permitted cases by RBI, it can also be done in Indian rupees. Now the doubt was, or the clarification is, in certain cases the exports proceeds are received by the suppliers in Indian rupees to their special rupee ostro accounts. That case, it is very much considered as you are satisfying the condition and that transaction will be qualifying as export. The refund of accumulated ITC balance to a registered person under section 54 subsection 3 is going to be available as per the ITC balance reflected in form GSTR 2B, not as per GSTR 2A. That is the another clarification. The next one is, when we are calculating the refund amount available under Rule 89 sub Rule 4, the formula says we need adjusted total turnover. And while calculating adjusted total turnover, you need to know the value of exported goods. So for calculating the value of exported goods, what should be taken as value? The clarification says that the value shall be nothing but what the value has been disclosed in FOB value, which is declared in the shipping bill or bill of export, or whatever the value has been disclosed in the tax invoice or bill of supply, whichever is less, that amount shall be taken as value of exported goods, and that amount you can use for calculating adjusted total turnover. The next clarification is regarding exports. When we are making export of goods or services, we can do that without paying tax and by furnishing LUT or a bond. Now, when you are doing this, the conditions are you should export, and if it is goods, the goods should be exported within 3 months. And if it is services, the condition is you should have received the consideration within 1 year. And if you are not doing that, you are supposed to pay back the taxes along with interest. Here the doubt is, suppose if I export the goods after 3 months, because the time limit is over, later on I would have paid the taxes. Now, if I export the goods after 3 months, or if I receive the consideration after 1 year, I would have already paid the taxes to the government because I have violated the condition. Now, because I am fulfilling the condition, can I get refund of unutilized e-credit ledger balance? And number two, whatever the IGST I have paid and the interest, can I get it as refund? The obvious, your refund of unutilized ITC balance is of course possible for you. And next, you have paid taxes because you have violated the condition along with the interest. You can claim refund of only whatever the IGST paid by you, but not the interest portion. The next amendment is regarding when a provisional attachment of a property is done and the encumbrance is created on that property in favor of the government. Earlier that will be removed. The encumbrance will be removed only on the written instructions given by the proper officer, that is the commissioner. Now that has been amended in such a way that the encumbrance shall be removed on such property on the written instruction given by the commissioner or within 1 year from the date of provisional attachment of that property, whichever is earlier. The next amendment is, earlier the commissioner used to allow the compounding of offence application only if the taxpayer has cooperated during the proceedings and taxpayer has given the full and complete disclosure of all the facts relating to the case. Now that cooperation during the proceedings has been eliminated, so whether the taxpayer has cooperated or not during the proceedings, if he has given true and full disclosure of all the facts relating to the case, the compounding offence application can be accepted by the commissioner. The next amendment is regarding the offences and penalties, the limits of this compounding of fees. Now, normally when the compounding of offence is happening for the offences specified in section 132 subsection 1, minimum 25% to maximum 100% of the tax involved was the compounding fees. Now that has been altered in such a way where if the offence involved is regarding section 132 subsection 1 clause A, C, D and E. For this, if the tax involved is 2 to 5 crores, minimum compounding fee shall be 40% and maximum shall be 60%. If the tax involved is greater than 5 crores, minimum compounding fees will be 50% and maximum it shall be 75%. So these are the change limits. Suppose if the offence is related to section 132 subsection 1 clause F, H and I, irrespective of the amount involved, the 25% of tax involved will be the compounding fees. And if at all you have not committed these offences, you have just attempted to commit these offences, then the compounding fees will be 25% of the tax involved. And if you are committing the offences which are covered in more than one category, here what we have discussed, then wherever the category the highest limits are falling, that category you have to follow for paying the compounding fees. Appeal. So if at all when you are going for manual filing of this appeal with appellate authority, you can do that only if it is notified by the commissioner, or in case if the order on against which you are going for an appeal is not available to you electronically, in that case you can also file the appeal before appellate authority manually and you will be getting the provisional acknowledgement immediately. So my dear CF final friends, please make sure you are passing this video with your friends also and help them to revise the amendments quickly, and wishing you all the very best for your exams. This is your Mr. GST signing off. Jai Hind.